Hello everyone, welcome to the world of smart investments. In this video, I will explain to you in real time, in practice, what is the essence of investment risk. I will provide you a clear algorithm for assessing investment risk and how to analyze investment risks in practice, like the greatest investors and greatest investor in the world, Warren Buffett. My name is Liubomyr. I am general partner, investor of Equity Capital Partners. In one of his annual letters to Berkshire's shareholders, Warren Buffett made it clear investment risk is the probability of an irrevocable loss of capital or failure to achieve the target level of capital return. What does this probability depend on? Every asset class has its own group of risks. We, as smart investors, must focus on business with growing value. Imagine this situation. Imagine case. You, as an investor, has a stake in any company, business. In what case, in what situation can you lose your capital, can you lose your shares, can you lose your stake? In which case? It's logically that this is possible with bankruptcy and inability to generate net profit. Key factors affecting these processes include: first, business sustainability, situation in the industry, and third, the price you pay for a share in a business. Each of these key factors has its own digital expression. It's necessary to focus attention on these figures and carefully analyze them in the process of risk assessment and management of such risks. What includes business sustainability? That is sustainable effective business model and high quality effective management. In this video, we will describe in detail the analysis of risk associated only with business model. Other risk groups will be considered in our future videos. The first group include 20 criteria. Let's take a close look at them. Be focused and attentive. Get started. First criterion: net profit margin more than 20%. Second criterion: return on equity and return on invested capital stably more than 20%. Third criterion: long-term debt ratio, long-term debt to net income less than 5. Fourth criterion: total cash plus cash equivalents plus short-term investments to total liabilities equals more than 3. Fifth criterion: steadily growing net profit trend. Sixth criterion: stable gross margin, more than 40% stable. Key moment. Seventh, total capital expenditures for 10 years, ratio total capital expenditure for 10 years to total net income for 10 years, less 50%. Eighth criterion, ratio depreciation to gross profit less than 8%. Ninth criterion, stable level of operating expenditures less than 70%. Key moment, stable level. 10th criterion, stable level of research and development expenditures less than 10%. 11th criterion, ratio interest expenditures to EBIT less than 15% and less than 50% for banks and financial organizations. 12th criterion, stable book value growing trend, compounding annual growth rate more than 15% for the last 10 years. 13th criterion, ask yourself, do the company's products or services have a clear consumer monopoly? 14th criterion. Next question. Is it likely that the company's products or services will become obsolete in the next 10 years? Next question for yourself. 15th criterion. Is there a growing demand for company's products? 16th criterion. Ask yourself, does the number of transactions grows steadily? 17th criterion. Ask yourself, is customer satisfaction index more than 90%? 18th criterion. Ask yourself, what is the ratio of primary and regular customers? It's very, very important. 19th criterion. What is the frequency of purchases of company products? In 20th criterion, ask yourself, does the company have the ability to adjust prices in accordance with inflation? And now, it's very important how to assess this criterion. Each of the 20 criteria is rated on 3-point scale, where 0 points is the best indicator associated with zero risk chances. Score 3 is associated with high degree of risk. Thus, everything is pretty clear and simple. The higher the score, the higher the risk level. If this video is valuable for you, please subscribe to this channel. I try to add real value from my wisdom, from my huge experience for everyone who is seriously interested in smart investing. I produce 2 videos in a week. Please write comments to this below this video and share your constructive critics. Share this video to your friends and colleagues. See you next video.